All right, let's head back now to one of our top stories this afternoon, the GDP figures. Sanisha Packirisamy is an economist at Momentum Investments. She joins us now for some reaction to that. Sanisha, at 1.2%, that tells us that there was an expansion of the economy in the first, or from the first to the second 3 months of the year. My question is, how material really is this growth, which was led by transport, communication and agriculture? How material was this growth?
Hi, Devin. I think we should look at the context of growth, taking the first quarter and second number into account. Of course, you know, there were big base effects that occurred, especially on a year-on-year basis. Back in the second quarter of last year, almost 2/3 of the economy was not in operation. So if we take the first and second quarters GDP numbers together and average those out, it looks like the economy grew by 7.5%. So that's quite a lofty GDP print coming through. Of course, we need to look at how sustainable growth is in some of these sectors, such as the mining sector, where we know that commodity prices have started to roll over. The manufacturing sector, which would be dampened in terms of the looting and riots that took place in July, as well as the tighter restrictions on economic activity in response to the third wave of COVID-19.
And we treasure these numbers so much simply because we want to get some insight into what the future looks like for job creation. It's interesting that today, Stats SA points out that the economy is 1.4% smaller than it was before COVID-19. I mean, which speaks very little to job creation in the near future, doesn't it? In other words, we are still catching up to an already poor rate before COVID.
Indeed. I do have to add, however, that most economists were predicting that the economy would only get back to pre-COVID levels much later this year or even early 2023. So that was a bit of an upside surprise. I do concur with you on the jobs front, however, because even though the economy is growing and activity has rebounded, we are unlikely to see the same type of gain taking place in the employment sector. In fact, we've seen very weak jobs growth coming out of the semi-skilled areas of the economy, predominantly in things like manufacturing. And given South Africa's poor track record on being able to reskill and upskill workers, it does mean that a large portion of South Africa's workforce may be locked out of the labour market for months to come.
And the answer to that, many are saying, is that you've got to get an uptick in investment. We were speaking with numbers a little earlier on, saying that for last year, that fixed investment to GDP ratio was sitting at 13%. For any economy to grow, 25 to 30% is what we are seeking. Why is it that investment is so slow into the country? Because primarily that's one of the biggest reasons why we suffer with jobs, isn't it?
This is exactly what the World Bank had suggested in our July update on South Africa that they wrote a report on, suggesting that South Africa's fixed investment ratio remained very weak relative to our peer groups, both from the public infrastructure side as well as the private infrastructure side. On the public infrastructure side, we know that a lot of government money went into paying government wage bills and the interest bill instead of being redirected into capital expenditure. On the private side, most businesses were quite wary about deploying further capital into the economy, given very weak demand and very elevated levels of political uncertainty. And as a result of both the public and the private sector not really contributing to growth in fixed investment, we've seen that ratio deteriorate.
Yeah. All right, well, thanks very much indeed. Sanisha Packirisamy, an economist at Momentum Investments. And again, to us, and as we were saying, you know, we've got to create conditions that take South Africa into an image of easy doing business. And if we get that and we break down the structural barriers, perhaps that investment ratio might move into the better.
Yeah, thank you for that, Devin. Hopefully then we'll see, the government and other role players stepping up on the implementation of the South Africa Economic Reconstruction and Recovery Plan that was announced by the President.